time. And it really hasn't changed much, for modern society. It's be a follower, don't learn financial education. It's mind-boggling. And I know you do this as part of your foundation as well for your charitable side, is people get out of high school and they don't know the thing about money. They don't know whether you should buy or lease a car, how to balance a checkbook, how to structure anything, how to buy a house, the most obvious things. I mean, it's amazing that is not taught in school. Even in business school, it amazes me that people go get an MBA and they're sort of naive in certain ways about financial matters.
Well, you listen to the mantra: go to school so you can get a job, work hard, save money, buy a house, and put your money in a 401k. They're programmed to be like Pavlovian dogs.
Mm-hmm.
Go to school, get a job, work hard, save money, buy a house, get out of debt, and invest for the long term in a well-diversified portfolio of mutual funds.
Mm-hmm.
I mean, that's all they know. Those poor guys are just cheap. It's really tragic.
Yeah, it sure is. Do you have any thoughts on, predictions for the future, where we're going to see the economy, what part of the cycle we're in now, what the stock market's going to do, et cetera, et cetera?
No, I mean, nothing's really changed. You've read Rich Dad, Poor Dad. Nothing has changed. I write in there, I think it's chapter 6, you should just print your own money.
Mm-hmm.
That's what the Federal Reserve does. I just print my own money. To me, that makes more sense than trying to get a job at also pancakes. Why would you go and get a job and they're going to take 50% of it, 50% in taxes, and then you're going to try and pay for your car and your car insurance and try and buy a house and keep her in debt, and then you wonder why inflation is eating you, and the reason inflation is eating you is because the bank just print money, and they go, well, what's happening? And then they tell you to save for your retirement, and then you lose it all in the stock market. I mean, people who are doing that obviously aren't that bright. I don't understand why they just keep doing the same thing. It doesn't make sense to me, but they do it.
Well, it doesn't make sense to me either, but if you look at the powerful voice of the financial services industry and the government and the education system, it's just so pervasive. I mean, in every magazine, I can't believe it, Robert, when I open a magazine like, Money Magazine or Kiplinger's Personal Finance or even Forbes,
well, you're not particular where you read.
Yeah, no. Sorry, I don't really open them that often, but the cover will say, retire rich, 48 ways to make sure you can retire in comfort and prosperity. And then you open the articles and it says, buy a diversified portfolio of mutual funds, invest in TIPS, Treasury, inflation-protected securities. I mean, this is like amateur advice. It's just childish. It's everywhere. It's all over the place. You turn on CNBC and you get this kind of advice from a lot of their guests.
Yep.
Yeah, it's the same thing. And what's interesting is that the IRS, most people, and the stock market really doesn't recognize inflation. I had Peter Schiff on my show a few months ago. He makes this statement. He says, the appreciation from 1929 until the Dow hit its peak, where we were looking at, bumping up against 14,000 in the market, has been only dividends. There has been no real capital appreciation in real dollars, although there has been in nominal dollars, obviously, in 70 years. And it's amazing that people invest in this stuff. It's 19 ounces of gold back then and 19 ounces of gold at the peak to buy the Dow. It's just mind-boggling that people don't understand how the value of money it's fluctuating. When you talk about inflation, I mean, obviously we've got a lot of it coming, and credit has contracted so much, and I think that's the reason we don't see it yet. Do you have any thoughts on when we're going to see this inflation? A lot of the so-called experts say, 18 months out, the inflation is really going to rear its ugly head. 2 years out. What are Kiyosaki's thoughts on that?
You're already seeing it. It's called taxes. When taxes go up, you have to have inflation. So Obama's going to have raised taxes. California's raising taxes. Everybody's raising taxes. I mean, state governments are bankrupt.
Yeah.
So, look, inflation is caused by the purchasing power of your dollar going down, but it's also caused by the government taking your money through taxes. So it's already happening.
Right. It's amazing when you look at it. I saw in a recent article that 46 states are in financial trouble to one degree or another. Obviously, California is one of the worst. Do you think we're going to see a federal bailout of California? I mean, what's going to happen? I live in California. I've lived here most of my life, and it's a joke. I mean, it is disgusting the way they have run this state into the ground, just spending more money on social programs and, buying votes with it. That's all they're doing.
Yeah. I do my best to stay away from politics, those prediction. I know California is in trouble, so they're starting, to pay with IOUs now.
Mm-hmm.
So what's going to happen? I really don't know. Probably the most likely thing is Bernanke will just spend more money and give it to the state. He's already giving the state of California billions of dollars.
Mm-hmm.
I think that's where people will see inflation, but it's just being sucked out right now. People are so much in debt.
Yeah.
And, people are trying to hang on to their homes. It's a tragedy.
It really is.
I just got off the plane from New York just now. I was at Fox News last night. I walked up to the desk, and this young girl, I said, "Hey, how you doing?" Terrible day. They just let me go.
Wow.
You go. So that's really probably the biggest tragedy, because jobs. People keep losing the jobs. It's not going to get, the economy is jobs.
Mm-hmm.
And I don't see new jobs coming in. You talked about Detroit. When I was on Fox News, they did a story on Tata Motors, which is the Indian car company, and they're coming in with cars, like half the price of GM.
Right.
GM.
In India, they sell that car for $2,500, I guess, or under $3,000. It's a real revolution. The Tata Motors thing. Yeah.
I don't know why people think a bailout's going to save them. I just think we're just delaying the inevitable. So I don't have that. I'm not optimistic. I have lots of gold. I have lots of silver, cash, income-producing real estate, and well-managed properties where there's jobs.
Right.
Not that hard a formula.
Yeah, I agree. It's not. But certainly people need to get educated and understand the stuff you teach. How many books do you have now, between your Rich Dad, Poor Dad series and, the one you did with Trump and the latest one, and The Conspiracy of the Rich will be a book, right, in September?
I think it will be.
Okay.
It's supposed to be coming out. Yeah.
Right.
I don't know how many books I have. I mean, I just keep working.
Yeah, it's fantastic what you do, though. It really is.
I think the book that really did it was called Rich Dad's Prophecy. I think it was 2002.
Mm-hmm.
And it's predicting the biggest stock market crash that's still coming. I mean, it hasn't hit yet.
And the Rich Dad's Prophecy, my understanding of that book is it's based on people pulling their money out of the ERISA plans that were started in the 70s, right?
Right, because they have to.
Right. So they'll be forced to take distributions. I think it's 70, and they can take them at 59.5 or something like that. And so that will cause a collapse of the stock market, and that's coming right up. What is that, about 3 years away till we start to see those a lot of those forced distributions?
Right. It might be faster.
Yeah. Wow.
So I mean, that's why you and I know it's silly to be counting on the stock market for long-term financial security. It's insane. But as you say, people do it, and you don't know why they do it, and I don't know why they do it. So we're singing to the choir here.
Yeah, we certainly are. And, but some of our listeners, they're still having faith in the stock market too, because I get their emails and I get their comments and so forth. What is it you're really up to in terms of your latest stuff? I mean, you've got educational classes, you've got books. The main thing really right now is the real book of real estate, right? That's the 22 contributors.
Well, it's one of them. Yeah. I have the real book of real estate, a Conspiracy of the Rich, and I'm working on a couple of other books.
When you come back to real estate, what makes me pretty optimistic about good income properties in the right markets, done the right way, obviously with the education that you talk about as being so important, and of course that is the first most vital step. What makes me feel good about them is that we still have a population increasing at really one of the fastest rates in U.S. history right now, about 3 million people a year. It's another baby boom combined with an immigration boom. Now, immigration has subsided a bit because the jobs aren't here like they used to be. And then globally, there is a huge population boom going on globally. That gives me a sense of security when it comes to really any commodity. And, what it seems like you're investing in a lot of times with these little inexpensive rental properties is the construction materials. I know you've mentioned that before. I believe it was on your PBS special, if I'm not mistaken.
Right. You're talking about the fundamentals, and it makes a lot of sense and all this. There's three things to any business deal. You have to get the right partners. And, so if you invest in a mutual fund, you're the mutual fund's partner. They're not a good partner, but people invest in them. So I have very good partners. I have to have good financing. And the trouble with mutual funds, the financing sucks, simply because it's your money. You put up 100% of the money, you take 100% of the risk, and you can only get 20% of the profit because the mutual fund companies take the money out. On top of that, your money is taxed at earned income levels, which is the highest tax. I mean, why would you put money in savings and mutual funds? I don't know, because you get taxed the highest of that. And the third thing you have to have is good management. So real estate, after you put those things together, it's management intensive. You know, no different